Hello guys, this is Hector. In this video I'm gonna talk about how to not expose yourself in a trade when a news economical release is about to come out. Okay, it's important to not be in a trade when the news comes out, because if the deviation from the expected number, from the outcome of what the analysts actually predicted, if the deviation is larger than expected, okay, you might get some random spikes on the chart, okay, and any let's say you are short in this market, okay, your stop loss is around there, and the any news relating any of these two pairs come out that day at that precise time, you could get spiked out, okay. Your stop loss could be triggered in one run in any random spike, okay, within seconds. It's so fast that you just don't have time to react, okay. It happens within 5, 10, 20 seconds. So you've got to make sure that you are not in the market when the unless you've moved your stop to break even, okay. You've got to make sure that you are not in an open, unprotected position when the news come out, okay. Basically, what you've got to look for is, what you've got to first of all is analyze which currencies you are exposed to. In this case, since this is the Euro CAD, okay, you would be exposed to any news relating the Euro or the Canadian dollar, okay. And in our second pair is the Australian dollar versus the American dollar, so you would be exposed to any news coming out on the Australian dollar and the American dollar. Alright? Okay, so today we're gonna go to the Forex Factory. Before at the beginning of our trading session, we're going to the Forex Factory economic calendar. We are going to see if there is any news coming out for any of these four currencies, okay. This is the Forex Factory website, okay. This is the economic calendar. Let's assume today is Friday, the 11th of May. It's not, but let's assume, okay. Okay, the first thing we see is that at 1 a.m. we have an economic release for the Canadian dollar at 1 p.m. Euro time, okay. Is the employment data. That's an important one, okay guys. As you can see, it's marked as in red, okay. It's labeled in red, which means a high impact, a high volatility, that this fundamental release could cause a high volatility on the chart, okay, should the deviation, the actual data come deviated from what the analysts had expected, okay. Okay, so we know that at 1 p.m. we have news coming out for the Canadian dollar, meaning that this chart, since this chart is related to the Canadian dollar, okay, at 1 p.m. could see potentially see some random spikes, okay, at 1 p.m. So we've got the way I personally trade is to impose myself a blockout period for 2 hours prior to the trade. So if it's at 1 p.m. From 11 a.m. to 1 p.m. okay, I impose myself to not take any trade. If I get any entry signal, my system gives me any entry signal within this time span, okay, based on technical analysis, even if it's a valid entry from a technical analysis point of view, I'm not gonna take it, because I know that at 1 o'clock p.m. No matter how solid my technical entry might be, some random spikes may stop me out, okay, and there is nothing I can do about it, okay. Trading is all about minimizing risks, okay. Any professional trader will tell you that. Trading is not about how many wins you score, it's about how small your losses are, or how small you cut your losses, okay. So don't risk it, don't expose yourself to the markets if you don't have to. If you know that there is a market moving fundamental release coming out at 1 p.m, you don't want to be in the market at 1 p.m, man, as simple as that, unless you've moved your stop to break even by then, alright? That's why there is this 2 hours blockout period. So if you enter, let's say at 10 a.m, you've got 3 hours, so the price could at least move 10, 15, 20 pips in your way, alright? 20 pips your way, so you can move a stop to break even, alright? The last thing you want to do is to have an unprotected position open when the news come out, because that's gambling, okay. It's basically like in a roulette in the casino, betting for either black or red. You don't know what's going to happen. It might go against you, it might go your way, you don't know. But at the end of the day, that's not trading anymore, that's gambling, okay. So that's the reason as of why I personally don't trade within the 2 hours prior the news, because in 2 hours it's rather difficult that I get a move large enough to safely move stop to break even, alright. Perhaps I enter and still price meander about. It takes a little bit to take off in my direction, and the news come out here. I just haven't had the time yet to move a stop to break even. The news go against me, and bang, I am minus 40 pips within 10 seconds. Okay, that's very possible, and you don't want that. Okay, so first rule: 2 hours prior the economical release comes out, you are within those 2 hours. I personally don't take any trade. You can do whatever you want, guys. My advice is to not take any trade within the 2 hours prior the news. Okay, just wait. If there is a new, if you get a signal and it's within the 2 hours, just wait. Let the news come out. Let it do the spike. Okay, and once it's gone. Okay, once you've put the news on your back, then start reanalyze the scenario and see if the entry is still possible. If not, well, no worries, you let that one go. There are many opportunities coming in the market every day. You don't have to take them all. Okay, remember, it's trading is not about how many times you win, it's about how many times you lose. Okay, if you cut your losses small, or if you try to avoid losing as much as possible, not overexposing yourself in situations you shouldn't be in the market, sooner or later you will make money. Alright, and the second rule is to not enter a trade at least or let's say 30 minutes. I personally do 30 minutes after the news comes out. I basically, when you need to wait some time. 30 minutes should be enough for the dust to settle. Okay, after the news comes out, like I said, there is some random spikes on the chart, and then it takes a little bit of time for the dust to settle before price begins moving it's the way it's supposed to. Okay, so here is the news. Let's say 2 hours before that it's a no-go. 30 minutes after the news, it's a no-go either. Okay, after 30 minutes you are good to go. Prior 2 hours from the news you are good to go, but as soon as the news come out, okay, 5 minutes before, move a stop to break even, or if you are still minus 5, minus 10 pips, exit. Just take the small loss, and 5, 10, 15 pips is nothing. Okay, you can make that up in the next trade. But minus 40, imagine the spike goes against you and you are minus 40, that's a big loss. Okay, it's better to take a small loss and to make it up in the next trade than to try to, well, than to expose yourself to a larger loss. Okay, so 2 hours prior the news, no trade, and no trade after 30 minutes after the trade. Okay. Okay, now let's go back to the Forex Factory calendar right there. So we know that at 1 p.m. we are not supposed to be in the market unless the stop is moved to break even on the Canadian dollar currency pair, which was the euro Canadian dollar. We are not to take any trade from 11 a.m. onwards until half past 1 p.m. Okay. Now, next one up. We were also monitoring a trade on the Australian dollar against the American dollar. Well, if we go to the Forex Factory calendar again, we see that we have at 2:30 p.m. we have two major announcements coming out. One is the retail sales, and the other one is the producers' inflation data. Okay. Inflation data, both of them labeled as high volatility announcements. So, 2:30, okay, another dangerous time in the day. Again, we don't want to be in the market from 12:30 p.m. to 3 p.m. on that particular currency pair, this one, the Australian US dollar. Of course, you can enter this one, okay, at 2:30, or whatever happens in the Australian dollar or the American dollar should not affect what happens in the euro against the Canadian dollar. Okay, so you are good to trade at 2:30 in this currency pair. Okay, this one is a go, but this one is a no-go. All right, because it's related to the American dollar, and there are two economical releases coming out from America at that time. Okay, so it was 2:30, so that means that from 12:30 to from 12:30 we cannot take, or I personally don't take any trade. 2:30 is the news, so let's give it 30 more minutes to for the dust to settle. So that means that at 3 p.m. from 12:30 to 3 p.m. We don't want to be in this currency pair, in any position open in this currency pair, unless our stop is to move to break even prior the news. Okay, guys, that was all. It's as simple as that. Don't expose yourself to some chaotic spikes on the chart. I mean, what's the point in very carefully selecting your pairs? What's the point in making sure that you have all the moving averages on your side, all pointing in the same direction, all parallel to each other, the 100 moving average not ever being not being challenged, blah 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 blah, if we enter right when a massive announcement is about to come, and any spike could take us out by chance, without it's out of our hands. Okay, so there is no point in being very careful about all the other aspects of the homework prior to the trading session, if then we mess it up entering a trade half an hour before the news are hitting the wires. Okay, there is no point in that. Okay, we gotta be consequent. We know that there is some high volatility coming ahead. It's best to stay out. Okay, give it at least 2 hours, like I say. All right. Okay, guys, that's all for this video. Any doubts, any questions, please feel free to send me an email. Bye bye.